Hello, hello, welcome everyone. Oh
Oh,
my gosh, it has been an interesting day to say the least, and excited to be here sharing more information about this crypto space and getting you all ready to get information that's going to make a difference for everyone. And I see more and more people coming in, so awesome. All right, so tonight, as always, we like to make sure that we're getting started with the correct mindset. So let's go ahead and type in the chat, wealth is my birthright. Wealth is my birthright because whether you believe it or not, you are right. All right. Wealth is my birthright. And welcome, everyone. This is Tanya Lawrence, the blockchain queen. We have some interesting information to share this evening. Yes, life, liberty, peace. That's what it is. And so, this is the month of love, the month of happiness for a lot of people getting ready to celebrate Valentine's Day for whatever that may mean for them. And so let's talk about loving our cryptocurrency portfolio, loving our stock portfolio, loving what we are going to do, what we're preparing for our future. And we're going to have an exercise at the end of the class. Um, All right, I got my notes up over here. All right, let me pull up these slides. So stay tuned because this is a very interesting exercise that I have done in the past, and it always gets the juices flowing to make sure that we're in the right mindset going forward. All right, thumbs up if you can see my screen, or let me know in the chat, or unmute, one or the other. I think my screen might be frozen. Okay, perfect. You see it? All right. So we're talking about loving your portfolio and diversifying your crypto investment, not just because it's the right thing to do, but to create stability and growth in your cryptocurrency portfolio. And so this is something that's very important. So loving your portfolio, diversifying your portfolio, whether it's in cryptocurrency or stocks. Um, Latoya, can I get you? Let me see. Can I make you co-host so you can let people in? Appreciate you so much. Okay. So you have the co-host controls to be able to let people in. All right. Um, yeah. So we're talking about loving our portfolio and being able to use the same information with crypto and with stocks. I don't want anyone to ever get in a position where they're pigeonholed and saying, oh, okay, I'm only just focused on crypto. We need to have cryptocurrencies. We need to have stocks. We need to have other investments. When you get into having larger amounts of money, you want to own pieces of real estate, you want to invest in other companies, you want to have a breadth of assets in your portfolio. Cryptocurrency is just one of the tools that we can use to build money quickly that you can take and use to diversify into other things. So, we're going to talk about balancing the risk and rewarding your crypto investments tonight. So if you're all in one coin, you might be taking unnecessary risk. And that is not what we want to do. We don't need to take risks that are unnecessary. But don't you worry, tonight I'm going to show you how to break down diversification in ways that matter and how to diversify wisely. So, first of all, let me see in the chat. Put a fire emoji if you already have Bitcoin. And I know, I think I see and know everyone here, but let's see in the chat a fire emoji if you already have Bitcoin. So we'll know that everybody, all right, I see it, I see it, I see it. I see you, Michael. Yes, if you can't find the fire emoji, don't worry about it, especially if you're on your computer. It is a hard thing to do to find those emojis. Perfect. So everyone has the Bitcoin. Now, if you're holding more than one crypto, um, go ahead and put a two. If you're on your computer, if you're on your phone, drop a diamond to let me know if you're holding more than one cryptocurrency in your portfolio. All right. Okay, so we got the twos. That's what I wanted. That is what I wanted. All right, so why diversification matters. Um, Reducing risk while maximizing your growth is the overall strategy when you're looking at diversing your portfolio. All right, Joseph, I see you. Always love seeing you there late at night, middle of the night, participating and growing your knowledge base out of Kuwait. All right, so crypto is highly volatile. Everyone knows that and understands that. But that is really one of the reasons why you must diversify your portfolio. The prices fluctuate rapidly. You want to making a single coin investment is pretty much the ability to flat out put yourself in a position to not be successful. Okay, so you want to have um, oh my gosh, I'm so tired. All in on one coin equals high risk. If one asset crashes, your entire portfolio takes a risk. This was our strategy with our investment banking firm and with our clients. In anything you do, as a matter of fact, we had some years ago a farmer. He came to us. He wanted financing for it. Wasn't a big loan. It's maybe like $2 million. He wanted a loan to refinance some debt that he had and to get more working capital. Well, his portfolio was set up so that 80% of the wheat that he put out and the flakes that he made went straight to Kellogg's to make cornflakes. It blew my mind. I love to be an investment banker because I got to learn about all these different companies and how things work. But 80% of the production that was purchased from his farm went straight to Kellogg's. And while that was great that he knew that he can count on Kellogg's to buy 80% of his products, the risk lied in what happens if Kellogg decides they want to go with someone else? What happens if Kellogg decides they're discontinuing that particular cereal? The bank understood that that meant 80% of his revenue would be gone. And so the bank had a mandate for that client as a business owner. And that's what I'm telling you, this applies in life across the board. The bank had a mandate that he diversified his streams of income. So I told him to come back when he diversified his streams of income. I think he added two more vendors and got it down to like, I think it was 62%. It was something in that area. And then the bank felt comfortable. Okay, well, at least we know he can go out and get additional vendors. And if something goes wrong, he will have still enough cash flow to be able to service his debt. So if something goes wrong and you only have one cryptocurrency in your portfolio or you have one stock, your family of five has one stream of income because only one person works and takes care of everyone. If anything goes wrong, everyone suffers. So diversifying income, diversifying coins in your portfolio takes away some of the risk that you can experience by having just one asset. All right. Diversifying also creates stability. Some assets, while they may be falling, while they may be falling, others may be balancing out your portfolio. So diversifying again creates stability. All right. So here's another analogy. Imagine you're a farmer and you are growing just tomatoes in your crop. Well, what happens if a bad storm comes and all the tomatoes are wiped out? You are now left with nothing. However, if you would have diversified and you would have had tomatoes, green peppers, onions, other fruits and vegetables that could wear cabbage, other fruits and vegetables that could weather a storm or weather a winter a bad storm, then you still have a whole harvest available to you at the end of the day. But with just one crop full of tomatoes, you're in trouble. All right. Okay. So how to diversify smartly with your crypto portfolio? You want to first, here's your three steps. So write these down. Diversify the coin type. You want to hold a mix of Bitcoin, which is the grandfather, the big daddy. You want to have Ethereum. You want to have some altcoins and stable coins to create some balance. Now, we've all heard my stance on stable coins. If you have assets that are performing, a lot of us are already in my altcoin club. So having stable coins makes it much easier to get in and grab those coins when an alert comes. But having stable coins, remember, does not produce returns for you. It just is a place for you to park your money, and then it sits at the value of the US dollar. Okay. Diversifying by sector. So the first way you diversify is by having different types of coins. The second way is diversifying by the sectors. So an example of that is having layer one coins, layer one blockchain coins. So that would be your Bitcoins and your Ethereums. Having some DeFi coins, that would be Aave. Let me see some other, I had in my notes some other DeFi coins. Hold on. Maybe. No, thank you. One is hold on. I had in my notes some different coins that you can have. When it comes up, I will make sure I get them to you so you know some of the different DeFi coins that I have in my portfolio. And if you have some in your portfolio, go ahead and share them. All right. And then lastly, looking at diversifying by risk level. So allocating funds by low risk coins, medium risk coins, and high risk coins. Immutable is one of them. Yes. Thank you. Latoya definitely has the list. She was on the call when I gave a whole list of DeFi coins to purchase on a Tuesdays with Tanya call. So you can go back and listen to that. Okay. All right. Hold on, guys. I think my screen is frozen. All right. So diversifying by coin type. Go ahead and you can take a screenshot of this. First of all, again, we talked about Bitcoin being the foundation of your portfolio. It's considered digital gold because of its stability. Ethereum being a coin that you want to have because of it being a coin that is for smart contracts, and it's going to cover a plethora of things like DeFi, NFTs, decentralized applications. Ethereum is my number two asset that I always have when I'm helping someone create a portfolio. Looking at altcoins, here they are. Here's some of the altcoins that we talked about before. Solano, ADA, and Link are just three of the innovative projects with growth potential, often performing well in bull markets. So right now, we are in a bull market. Excuse me. We're in a bull market, and we'll be here until April, somewhere between April and October. All right. That does not mean after October there will not be the ability to see profits in the crypto space. But usually after then, when Bitcoin starts to lower its price, you're going to see a lot of other coins following that trend. For those who are new, Bitcoin does something that's called halving every 4 years, HALVING. And when Bitcoin halves every 4 years, over the next 12 to 18 months, we're in what's officially called a bull run in the cryptocurrency space. After that, we can be That is a significant bull run time. After that, we can either be in a bull run or bear run. And so we want to make sure that we are definitely taking the opportunity to gather profits while we're in this bull run. Okay. So let me see. Stable coins. Stable coins, when we talk about stable coins, again, those are coins tied to the value of the US dollar. So those would be coins like USDT and USDC. T as in Tom, C as in cat. Holding those coins allows you, if you see some fluctuation in the market, many of my students who have had one-on-one consultations with me, when they see fluctuation in the market and we've done markup of charts, we know where we want to be when we start to take profit. We have a strategy that we're going to take a portion of our portfolio and move it over to a stable coin. Now, what would that look like? Let's say back last year in January, let's say if Bitcoin was at 60,000, and we knew that based on history and statistics that Bitcoin would hit $100,000 this year. Many of us took the profits from it going from 60,000 to 100,000 and moved a certain portion of our portfolio over to stable coins when it hit $100,000. There was a contest recently, and Latoya won the contest. And instead of getting the prize that I was going to give to someone else because she already had purchased it, we had a one-on-one consultation and we went through and looked up charts that I had marked up. And one of the things that we saw was that Bitcoin was going to dip back down, or had the potential to dip back down to about 89,000. And that was a huge buying opportunity, because then we saw Bitcoin go from 89,000 back up to over $104,000 a coin. There is nothing right now in our portfolios on the stock market that is making those type of consistent gains. And so when you have the ability to have, you maybe took money out at 100,000, you set it aside and you said, I'm going to sit this $20,000 here, and I'm going to wait for, based on the charts, for Bitcoin to drop below 80 or $90,000 was the marker. It actually went to 89,000. That is the time when you take those coins that are in the stable coin, the USDT or USDC, and you go and buy more crypto at 89 or 90,000 and watch it run back up. And so guys, from now, which is February, until April, possibly October, we can continue to see opportunities for growth in the Bitcoin coins value. Today, when the new crypto czar did their conference with the ag secretary and some other people, we expected to hear a lot more detail surrounding the development of the regulations that the US is projecting for cryptocurrencies, or which coins they are going to work with in the United States. They were very careful not to say any names. They were very careful not to give any details just in case they couldn't deliver. But what they did say is that over the next 100 days, that we can expect to see some changes in crypto regulation and some things being put into place that are solidified, mostly because, and they were able to give that kind of outlook because we have a crypto-friendly House, a crypto-friendly Senate, a crypto-friendly president. The SEC is crypto-friendly. And then he had people like the ag secretary who was also crypto-friendly. And so all of these different departments that would be in charge of moving money around and making money flow for the US are all saying, yes, we want to be in the crypto space. What did that do to the market? As we were watching the announcement live, I was looking at my crypto markets move on a website. The crypto market tanked because people were pissed off that they didn't get definitive answers. What does that mean for people? The people who are uninformed panicked and sold, because they were like, oh man, things didn't go as planned. We see that people are selling off. They sold, and a lot of them sold off at losses. What do we do? Tell me in the chat. What do all my blockchain queen baddies and buddies do when we see the crypto markets going down? Tell me in the chat. Let me see. That's right. We buy the dip. Thank you, Latoya. I thought James would be the first one on it. All right. Oh, and thank you, Boo Man. I see you have some of the other DeFi coins. He said, let me see here. Oh, the screen is moving too fast now. I'm trying to get back. Look, guys, page up and you can look at Boo Man's comments, some of the other coins that he purchased. Again, do your research before you purchase any coins. Yes, yes, yes. Michael said switch them over to stable coins so that the value doesn't continue to increase for you and then buy on the low. Absolutely. Michael's been around a long time with me. All right, awesome. So great answers there. Okay. So diversifying by sector. So we talked about diversifying by the coin type. Now we're going into diversifying by the sector. The layer one blockchains, these are the foundational cryptocurrency networks. So again, Bitcoin, Ethereum, Solana, ADA, those are coins that would be considered your layer one blockchain coins. You can have a segment of them. All right. And then I'm going to wrap this up and I'm going to give you a simple plan for anyone who's newer to the crypto space and you're like, I don't understand what layer one means. You can definitely go back and look at videos that I've done in the inner circle that goes into a lot more detail on some of these topics, but I'm going to give you a plan. So don't feel overwhelmed. The next portion or the next sector that you can diversify is going into decentralized or DeFi, decentralized finance or DeFi platforms, having that as a portion of your portfolio. So these are platforms for lending, borrowing, and earning yields. So Ava is the one that I was talking about. Uni is another one, and Comp is another one. Okay. So gaming and metaverse, even if you are not into this is not a topic for you, guys, you still need to have some cryptos in this space because it's not about what's important to us. Just like when you're looking at stocks, you're looking at what the future is, where the trends are going. And these are some of the coins in the gaming and metaverse sector that are performing well. Okay. And then some privacy coins as privacy starts to shift from Web 2.0, where you have to worry about the three credit bureaus being hacked, data breaches, and everything that's happening there, I honestly think that more and more data breaches will happen so that they are forced to move over to the blockchain and where they'll be able to have information, whether it's based on credit, information about people personally. They even have a coin that is talking about your personality type. And if based on your personality type, you should be eligible for financing or eligible to go into someone's house unassisted, to go look at their home without a realtor or someone present with you. And so looking at some of those types of coins to have in your portfolio, more and more of them will be picked up over time and will be used. So XMR is one of them, and ZEC. Z as in zebra, E as in echo, C as in cat. All right, let me see if I had anything in my notes that I wanted to share. No, okay, we're good there. All right, so diversifying by risk level. We talked about the coin type, we talked about the sector. Now we're going to talk about the risk level. These are all different strategies you want to look at when putting together your portfolio. You want to have the low risk coins. These are coins that have a high market cap, Bitcoin and Ethereum, again, and stable coins. They provide long-term stability. They're kind of the rocks in the industry. Medium risk coins, these are coins that have a medium market cap, but they're also strong coins. So Solana, Matic, BNB, they offer growth with some volatility. All right. High risk coins. These are, you guys, you know how I feel about meme coins, but I keep hearing people talk about them. I am personally against meme coins. They are a popularity contest. That is it. There is no value. You can't mark up charts and track based on historical events. I like to have some systems that I can put in place. Meme coins are like going to the casino, putting your money in a slot and pulling the little lever. However, my mother swears she has a method to win. I think they just like her and they know that if they give her a free hotel room, she's going to come back. So they got to give her a little bit of coins every time she shows up to keep her happy, right? It's a popularity contest. They see the people who come all the time based on their rewards cards. They maybe win a little bit more. They know what's going on, what people are thinking. Meme coins, I feel the same way about them. New tokens, high risk, but the potential for high rewards. And then speculative projects that have high reward potential, but increased risk. I have a group, and many of you are already in the group that is the altcoin club on Sunday. I think it was Sunday night. Yeah, Sunday night back as soon as I got home, we had like 5 alerts in the middle of the night for some of the higher risk altcoins. These are low market cap coins. These are coins just like stocks. These when you have a stock that goes to the New York Stock Exchange, that means they've made it. They're super excited. This company has made it. These are coins that are waiting for their big moment to hit the New York Stock Exchange. They're in development mode. They're moving. They're figuring things out. And so they're considered high risk. And I have technology that gives us alerts on when to buy that coin, when to sell that coin. Okay. And the most important part you want to have as your motto is the golden rule. Never keep more than 10% of your portfolio in high risk coins. This will help you manage your exposure. Put that in the chat, 10% or the number 10. Never more than 10% of your portfolio should ever be in your high risk coins. All right. And I'm going to help you by providing some framework around what percentages you should have. So when you manage your own portfolio, we are putting ourselves in a position to not need banks, to not need governments. We have our own money. It's not owned by them. It's not managed by them. And I'm going to show you how to manage that portfolio. The first call, the first Tuesdays with Tanya call I did at the beginning of the year. I think it was the 7th or 2nd of January, very early on in the year, the very first Tuesday. If you go back and listen to that replay, I did a whole call on how you manage your portfolio on an annual basis. There are even booklets that you can purchase on the platform that will give you the ability to print out those booklets and manage your cryptocurrency portfolio. We are not doing this by happenstance. We need to have systems, strategies, and we need to follow our own systems and strategies. So number one, you want to regularly look at your portfolio. This does not mean you have to obsess over it daily. Do a monthly checkup on your portfolio. Okay. Be strategic about taking profits. This is number two. Take profits when assets grow significantly to reinvest in safer assets. This is something that I did to grow and have money be able to be put into different platforms. I am now personally against taking my cryptocurrency profits and putting them into other platforms. They don't perform like crypto. And so while I have crypto profits that I've taken out and put into a different platform, then immediately every time what happens is that coin goes up. And I'm like, damn, I missed my opportunity to see returns because I had my money I thought was profits free and clear working somewhere else that's not performing as fast and never will. Okay. So take other money, have another pot of money that you use for other investments that may not grow as fast. Okay, so being strategic about taking those profits and reinvesting them in other currencies that have the ability to grow. Use multiple wallets. You have the ability to have your cold wallets for long-term holding, your hot wallets for trading, and your exchange wallets for convenience. Now, again, one of my personal preferences is I only have for my coins that I am trading as a part of the altcoin club. Those are the coins that I have on exchanges or in a hot wallet. Everything else is stored in a cold wallet. That is for an added level of security. It is also to keep me from being tempted to spend my money on something. There have been times where someone needed something, or I wanted to do something, I wanted to purchase something. I'm like, oh, I got all that money sitting over there. I'll just use it and I'll put it back later. It never happens, guys. So, as an added layer of protection for me as a shopper, I have my money sitting in cold storage. I got to go through a few steps to get that money out. And that is my protection from me. All right. Okay. Common diversification mistakes. What to avoid when building your portfolio. One of them, let's see. I made up all these notes to go with my screens. I just want to make sure I'm not missing anything important for you guys. Okay, I think I'm good. I'm on track. I'm on track. I'm on track. All right. So here are the mistakes that people like myself have learned over time that have cost us time, money, and profits. The number one mistake is trying to hold and manage too many coins. Holding 50 or more coins, as guys, I'm even going to say holding 30 or more coins is a recipe for a headache and a disaster, because many of the coins, especially when you're looking at altcoins that have small market caps, you have to get them from different exchanges. Fortunately, in one instance, I bought XRP when it was barely known. It was 20 cents a coin and I forgot about it. Thank God I forgot about it. I bought a shit ton at 20 cents a coin. It sat in a portfolio that I forgot about because there was only one place you can get it way back then. Um, and based on one of these Zooms, Mike, I was on with Ken Francis. We were sitting around talking one day on a Zoom. And boom, we found out about this coin. We read the white paper and bought some XRP. Thank God I forgot about it, right? But that is what can happen. And what happens is not only can you forget about it, but what happens when you're supposed to put that information with your assets so that the person who's in charge of your estate can manage that for you when you're gone. It's a lost cause then, and you don't want people to be confused that need to take over for you. So spreading yourself too thin, having too many coins and too many different portfolios is a recipe for disaster. Number two, ignoring the big boys, Bitcoin and Ethereum, skipping them and going for high risk altcoins because they have their potential for rewards is a mistake. You need to have the big boys in your portfolio. I can't tell you over the years how many people I've met that have been excited. They have this coin, they have that coin. You know, it's usually two or three coins are really excited. Someone told them about, they don't know why they're excited about them other than someone told them about them, and they don't have those two major coins in their portfolio. And just even over the last year, they missed the opportunity to have major returns in both Bitcoin and Ethereum. So you want to have those coins as a part of your portfolio. And then panic selling in a crash. I talk about this all the time. When the market dips because of news or because of some exterior factor, not because the coin is going away. The markets are volatile. They are supposed to go up and down just like the stock market. But think about your 401k with your job. Your 401k manager, yourself, you're not sitting around looking at your 401k, and when the market dips because somebody said something stupid on the news or someone did something stupid, you're not saying, oh, cash out and divest my 401k. No, you're going to wait. You're going to wait for it to rise again. Don't make that mistake with your crypto portfolio. Okay, here is the 50-30-20 rule. Take a screenshot, write this down. This is very, very important. Remember, I said I was going to give you an actionable plan. And this is one that's very easy to use. 50-30-20 rule. Okay, this is how you balance your portfolio in a very easy way. Make sure you have 50% of your portfolio in Bitcoin and Ethereum. So these are going to be your core for long-term stability and growth. Okay, so it could be 25% of it is Bitcoin, 25% of it is Ethereum, whatever you want, mix it up however you want. You could have 10% Ethereum and 40% Bitcoin, but 50% is a good guideline for what percent you want to have as your stable coins. or not stable coins, your two core coins. 30% of strong altcoins. These are high quality projects with real utility, not meme coins, not meme coins, not meme coins. These are coins that have growth potential based on their utility and their track record. Okay, so these are coins with strong potentials. Guys, something else you need to note. Um, oh my gosh, I don't remember who said it, but at this moment, there are about 1 million altcoins being developed every single week. 1 million altcoins being developed every single week. Altcoins and the development of altcoins and the development of technologies on the blockchain are outpacing the growth of new companies being developed in the United States on a weekly basis. That tells you that number one, there's going to be continued growth. There's going to be new solutions that take care of the old solution. If you just look at, say, Facebook or any social media platform that you like, when you go on there, Facebook, I would say, has more, at least on my platform, I see more people advertising about their business and their solutions that they provide via their business. There are so many types of businesses in one category, whether it be credit repair, I have realtors galore, and coaches. There's 10 million coaches on Facebook and on Instagram. So when you look at that, the same thing is happening with altcoins. So the ones that you see that are popular today, that provide a solution today, may not be the ones that are popular and made it to the dance a year from now. Okay. So you need to pay attention to your altcoins a little bit more than, say, your Bitcoin and your Ethereum. Okay, and then you want to have 20% of your portfolio being your high risk coins, and some of that can be in the form of stable coins. Remember, in my altcoin club, we use the coins that we want to have as a part of our high risk portfolio there. That is a very easy way to do that because we are using artificial intelligence and data from 8 different sources to feed into the artificial intelligence to let us know that based on these 8 factors, when all of these things aligned in the past, there was at least an 80% chance that there was a profit or a loss on that altcoin over a 72-hour period. Okay, so when you're looking at altcoins, high risk altcoins, there is a huge potential for growth, but there's also a huge potential for loss. And if you don't have technology helping you with that or the ability to research them, I am going to kind of advise to stay away from the high risk altcoins. Um, High reward definitely may be there. Listening to social media is not a strategy. Listening to someone get on a soapbox about a coin is not a strategy. It is usually a pump and dump scam. Okay. And they may not be, they may not know. They may have got the information from someone else and then they're just relaying the information. So they can't even really give you solid advice. Okay. So wrapping up, and then we have a little activity. You want to diversify your coins. That equals smart investing. You want to balance your risk and your reward to have a key. That's the key to long-term success. All right. Stay disciplined and review regularly. Remember, I have portfolio trackers, TanyaLawrence.net. You can go on there and order your portfolio tracker, download them, add your information on your coins. Guys, this is so important. I know Monisha's on here. She's a beautician. We did hair together when I was coming up as a shampoo tech and then became a cosmetologist. She was one of my mentors in this space. This is like having clients and not keeping track of when they got their color services done or their relaxers done. And you just let them come in on a whim and getting services done. Someone's hair could break off. They can have bad reactions to the products because you didn't do it in the right time frame. The same thing with your portfolio. You got to manage your portfolio. Everyone here is in the inner circle. So I'm going to also, looks like she's doing hair now. All right. I'm going to offer that if you have completed the Blockchain Queens Bitcoin Basics, you've had a consultation with me, and you are interested in joining the altcoin club so that 20% of your portfolio doesn't have to be guesswork, reach out to me, put it in the chat. You can put altcoin in the chat and I'll get back with you. But I want you to make sure that you are using this information to diversify your portfolio, have massive success in your portfolio. And for goodness sakes, invite someone to join you here next week for the Q&A to learn more. Next Tuesday will be Q&A. The Tuesday after that, I think it's our call on taxes again, unless something comes up on the media that I need to share that's way more important than taxes. I don't think it could be. Um, all right, Joseph, I got you. I'll be talking to you about the altcoin club and our activity for tonight before we wrap up. Wealth is our birthright, right? So we have to be in the mindset to actually be ready to spend this money. If you're not ready to spend this money, wealth isn't, your mindset isn't ready to spend. Your mindset isn't ready to attract. So either on a piece of paper or in the chat, have a, we're going to set the timer for 1 minute. All right, here we go. I need you to tell me how you would spend $20 million in 24 hours. Okay. Now, the only rule is that you can't spend any of the money on investments. Tell me how you would spend. And if you're going to write it down, just send me a screenshot later so I can see how you would spend it. If you're putting it in the chat, I'll see it here. How you would spend $20 million in 24 hours. You got 1 day to spend $20 million. How you would spend it. And the only rule is you cannot spend it on investments. No investment property, no business, not starting another business. Tell me how you would spend $20 million. And if somebody wants to unmute themselves and tell me how they would spend it, I'd love to hear it. Go
I
ahead,
would
Michael.
buy a home. I would buy a home in
How
seven
much would
different
the home,
countries.
how much would the home be?
I would get small chalets like in Europe and Australia. I
So
would get,
Europe, how much would that home be?
I'd figure about probably $1 million each home.
So we
And
got
then I would
Europe
give,
and where else?
mhm. I would do Europe, Australia. I would have something in Japan, inland Japan. I'd also have, I would have a uh, yacht in the Philippines,
How much would the
uh,
yacht cost?
probably 7 million.
Okay.
I've worked on them. I know what they look like. Um, and then I would have to figure maybe South America. I would have a place down there, and I would have um, vehicles there being maintained. Um,
How much would the cars cost?
I would not get something so tempting that it would be stolen.
Mhm.
I would probably just get a good SUV or something like that.
And so SUV
And
is about 50,000 or
well,
100,000.
let's go a little higher than that. I'd probably say 100,000 maybe.
Okay.
Yeah.
All right, Michael, you still have about 8 million to spend, 9 million to spend. You live all over the world. You
I'm
still got
sure. I'm
money.
sure. Yeah. Yeah. Hmm. Yeah. You couldn't spend $20 million in a day. That's for sure.
I could.
Uh, I'm sure my vision is not big enough. Let's
I
put it
need you to
that
fix that for me.
way.
All right. Start
No,
working on that.
thank you. I appreciate
Yes,
you.
absolutely. Anybody else got any ideas of how they're going to spend their 20 million?
Well, without, can you hear me, Tanya?
I can hear you, Brenda. What you got for me?
My first, my first of the training, I think I've been able to just listen without me having a whole lot of knowledge of how the crypto works. I heard you saying, and the more stable, use Bitcoin and I think Ethereum. So probably 5 million. What was it? Yeah, 5 million in Bitcoin, five million.
You can't buy investments.
Oh, you did say that. No investment.
Hmm.
So definitely have to be real estate then.
That's
And
an
Connecticut,
investment unless you're going to live there for enjoyment.
well, I'm in here. I live here now.
All right.
Connecticut, so the houses are very expensive. So I probably Connecticut between Connecticut, where's the other place? Someplace in Virginia. Okay, so I would buy in Connecticut maybe 10 properties. It's easy to get 10 properties for $1 million. And the other 10 million is probably all going to be real estate. Can't do no stocks or nothing like that, right?
Right. These
So
have to
then,
be all places you're going to live and
oh yeah, I'll be on the East Coast.
okay.
New York, up New York, like Pomona, upstate New York, 5 million there, and
Hmm.
then hey, yeah, in Delaware, not Delaware, Maryland, another 5 million in real estate because I can't think of anything else with properties because I have a lot of family that does real estate, so they can help me out. So I
Awesome.
think I divided it up not enough, right?
Yes, that was 20 million right there.
Okay. Yeah, because real estate is always gonna increase in value.
I
I
love it.
might have
Okay. Boo Man says vintage cars. So 20 million in vintage cars, Boo Man. Hold on, let
It's
me
a
see if
lot
I can
of
help
oil
you unmute.
changes.
Okay, there you go, Boo Man. 20 million
Yes,
in vintage cars.
yes, absolutely. Well, I'd have to get storage. Storage, I'll probably spend 4 or 5 million for storage. But
Okay.
older cars like '66 Camaros, vintage Ferraris, you you could spend 20 million easy, easy,
I
and
love it.
and still have if something happened, you could spend it for money. If you needed to.
Fantastic. All right. I see Mick has decided he's going to add a house in Panama to his list. And Latoya says she probably buy a small island. I love it. Fully furnished and all the trimmings with running water. Mick said that's a lot of oil changes, Boo Man. But he's got $20 million. He's good. Yes, all the bells and whistles. Anyone else want to share what they're going to spend their 20 million on? All right, checking the chat, making sure I didn't miss anything. Oh, Latoya said Lido was another one of the coins, Lido. Definitely check, do your research. All right, awesome. Well, great guys. That was a fun activity. I got really good at spending $20 million at a time. We would do this when we go out to dinner, even with the kids. Like, okay, how would you spend this money? And at first they were like confused about the concept of how much things cost. And then they got it and got the hang of it. So they were able to say, okay, I could do this. So those kids know how to spend some money. All right, guys, it was a wonderful evening. Thanks for joining me. I love to do a little dream building. Yes, dream building is what it's all about because if you can't even conceptualize having the money, it's not going to come to you. So wealth has to be your birthright and you have to be ready to spend that money when it's coming to you. All right, guys, have a wonderful, wonderful evening. Uh-oh, hold on. Manisha says, let me see what she's got here. Put my drink down. She was typing away. She would buy one home at 4 million for her mom and her servants. Yes, honey. And one home for her mom and father-in-law with their servants, one home for her family gatherings at 4 million, and onto the current home, add on to the current home and bells and whistles, pool, sauna, etc. Yes, 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 yes. Run it up. Buying Allen at 10 million. Yes. There you go. I love it. I love the way y'all think. All right, guys, have a great evening. Bye bye.
Thank you.
You're welcome.